Hi there, hope you're doing well. Martin here, founder of Paradigm Shift. We're going to go through potentially one of the most important exhibits for RYC. This is Exhibit 10 on opening a new garage. We'll see lots of details here, and they haven't opened a new garage for a couple of years, so maybe it's time for them to do so on exam day. Like the other videos we've got on YouTube, unfortunately we can't directly present the ICAEW content, so we've made our own version. If you check out the link in the description, we've got a more detailed advanced information review mini course, and yeah, we can present the ICAEW content within there. But let's have a look through our summary of very important Exhibit 10. When opening a new garage, RYC conducts extensive planning to test viability, including site selection, market research and financial modelling. In 2021, the company decided to explore setting up in Redhill, keen to expand their presence in Surrey despite not actively seeking new locations. This is important to note for any major new venture, so this could be opening a garage or anything that's major, so different type of project. RYC sets a 2-year payback target. The gross profit earned should exceed the initial outlay within the first 24 months of operation. This video examines how the Redhill garage was planned, launched and ultimately succeeded in meeting this ambitious target. Key planning factors. Competition analysis. We need to evaluate nearby garages, their reputation and the feasibility of attracting motorists from existing providers. Site suitability. We need to assess if the preferred site had the right size and configuration, whether it's similar to RYC's other garages and it was well positioned to attract customers. Car ownership density. This involved determining if there were sufficient cars in the vicinity to provide satisfactory level of business. Environmental impact. This involves ensuring noise, smells and emissions would be within statutory limits and acceptable to nearby businesses and homes. Initial market analysis. Target market share was 5%. This would mean aiming to serve 832 cars. The total car population was 16,640 in the catchment area. Service breakdown was MOTs and service 75%, repairs 37.5%, same for tyres and windows 12.5%. So Haley Joseph prepared detailed forecasts for the first 6 months of the operation, which was January to June 2022, and summary forecasts for the next 3 6-month periods. The analysis projected each car would make approximately 1.6 visits to RYC in a 6-month period with varying service needs. These projections were supported by actual experience from RYC's 4 existing garages regarding average prices and expected time for each work type based on the same opening hours. Capacity and resource planning. Redhill Garage was planned with 5 full-time equivalent mechanics, providing 270,000 minutes of available staff time over the initial 6-month period, accounting for holidays. This calculation was crucial to ensure the garage could handle the projected workload. And here we've just got a visualization of the workload. You can see MOT and service was the most important, and then repairs. The forecast showed that the expected 1,352 jobs would require 198,120 minutes, leaving approximately a 27% spare capacity. So definitely evaluate whether there's spare capacity in your calculations in the exam if this comes up. This buffer would allow for unexpected surges in demand, staff absences and potential growth beyond initial projections. Financial forecasts. January to June 2022. Revenue 280k with gross profit of 73k. Next period 370k of revenue and 95k of GP. Then 470k and 125k. And finally 530k with GP of 150k. Haley conducted sensitivity analysis to test the impact of altering key variables such as increasing or reducing the total job numbers by 25%. This revealed upper and lower revenue estimates of 350k, 125% of the main forecast, and 210 or 75% of the main forecast for the first 6 months. The initial outlay was forecast at 320k, comprising 280 for premises and 40 for equipment. The sensitivity analysis showed the outlay would need to be 38.4% higher, an additional 123k, in order for the 2-year payback target not to be achieved. So they had a decent margin of safety there. In other words, payback was pretty likely to occur. Actual performance versus forecast. So in the first 6 months, the forecast was 280 revenue and 73 GP, but actually they only got 219 revenue and 53 GP. So performance fell short of expectations towards the lower end of Haley's range, with multiple factors contributing, including variations in job numbers, time per job, and average prices across different work types. For the full 24 months to December 2023, the forecast was 1.65 million revenue and 443k GP, but they actually did better than this, 1.75 million revenue and 493k GP achieved. Despite the slow start, performance rapidly improved. By the end of the 24-month period, actual results exceeded forecasts, with the garage achieving payback well within the target time frame. Factors behind the success. Strategic location. Choice of location proved to be a significant factor in Red Hill's success. Competitor closure. A nearby rival garage, which was over 50 years old, closed down following a threatened rent increase. So there's a bit of luck there. Strong reputation. The garage began to earn a strong reputation in the final months of the initial period. Rapid growth. Red Hill rapidly built up its business, achieving nearly £1 million of revenue in the year to June 2023. The board was satisfied with Red Hill's performance despite the initial shortfall. Trade in the last 2 months of the initial 6-month period was particularly encouraging, leading to confidence that the garage would prosper. And this belief was validated by subsequent results. Payback assessment and conclusion. So the key metrics was the 493k actual GP, which over 24 months exceeded the forecast of 443k. Actual outlay was 336k, slightly higher than the forecast of 320k, but obviously the actual gross profit easily covered this. And then we had 1.75 million, as we've seen, of total revenue over 24 months, which surpassed the forecast of 1.65 million. Summary. The Red Hill garage comfortably achieved the 2-year payback target, with gross profit significantly exceeding the initial outlay. The actual outlay was higher than forecast due to unforeseen capital expenditure in adapting the site to RYC's specifications, but it was more than offset by stronger than expected performance in the later periods. By the end of December 2023, Red Hill was continuing to thrive, with actual results exceeding forecasts. The strategic decision to expand into this location, despite initial challenges, proved to be sound and contributed to RYC's growth in Surrey. That's it for this exhibit, and I hope that you found that useful. Hopefully we'll see you again soon for another video.